Currently, there's a lot of fear in the market. We can see that Donald Trump's discussions about tariffs towards multiple different industries and countries is hitting the market from every direction. In the semiconductor space, a space where just a year ago, every single company on this chart, essentially every single one, was hitting their all-time high. Now, a year later, everyone is down 5 to 10%, in some cases, multiple times a week. And in my opinion, this also is a point where the fear maybe is a little bit exaggerated. And I do believe that we will find very, very good value at this point right now. I mean, look at some of these numbers on the list, like AMD down 8.6%. And sure, they will definitely be affected at some point, right? But look at the pure numbers for AMD. So this is my expected AMD revenue growth by segment and combined. You can see that the embedded is in the green. We have gaming in the purple, we have a client in the red, and data center, the big one, in the blue. Currently, we just got our Q4 numbers, and in 2 or 3 weeks from now, we will have our Q1 of 2021. It will most likely be the second best quarter ever for AMD, only behind the Q4 of 2024. And looking at AMD's 2025, most likely the second half of the year will be much better. This is a trend that we've seen over the past couple of years, even as far back to, I would say, 2018-19, where AMD traditionally has much stronger second half of the year than the first half of the year. And knowing that the data center revenue will grow very, very fast, and are these numbers, where are they coming from? You can see here on row 8 to 13, Q1, I expect them to have roughly 2 billion in revenue from the AI GPUs. They will increase that to maybe 2.3 billion or so in the second quarter. But the big jump I expect to come in Q3 and Q4 to 3.3 and 4.5 billion for a combined 12.1 billion US dollar. Let's go with 12 billion, right? That is essentially more than 2x than the number that they managed to sell in 2024, only from data center, which is their highest margin product at this point. Now, going into the other segments, again, the gaming is going really well. We know that AMD is selling their RDNA 4 gaming GPUs like hotcake. So that part is going to be at least much better than the past couple of quarters where the numbers were very, very weak. But the other strong segment is obviously AMD's client, the laptop CPUs and laptop APUs, where obviously they will have a little bit of a quarter-on-quarter revenue decline. But that is very normal for AMD in Q4. I mean, everyone is purchasing for the holiday season, and Q1 is usually much slower. But going throughout the year, this is going to be a great year for AMD, even with tariffs. So I think AMD currently, looking at the earnings per share, I mean, my models, if we go to the Excel sheet and have a look at, let's say, Q4 of 2025, I mean, I'm expecting in best case scenario to them have around 1.75 to 2.2 US dollar of GAAP earnings per share on a single quarter, right? And for the 2025, I expect AMD to at the bare minimum have 4.5 to 5.5 US dollar of earnings per share. You can currently buy the company at something like 93, 94 US dollar. That gives you a price to earnings ratio of just around 20 for a very, very high growth company. I mean, I'm expecting AMD to gain market share in the AI GPU space, and they're starting from low numbers, less than 5 billion US dollar, which is like peanuts compared to Nvidia's number. Speaking of Nvidia, let's have a look at Nvidia's last year sales. You can see that they managed to sell roughly 100 billion or so in 2024 in AI GPUs. Although all of that is not only AI GPUs, a little bit is from the networking, but anyways, like roughly 100 billion from AI GPUs for Nvidia, that is like bonkers, right? And if this market is supposed to grow, and it looks like growing, AMD could easily like double their sales at the same market share. But imagine what they could do if they start to gain market share. And we know that they're finally taking their software business very, very strongly. There's like every day you see some positive reaction from company X, TensorWave, or whatever that is. People doing software, people doing hardware, like everyone is so happy with AMD right now. So I think in the long run, they're a winner on this list. Going to the other companies there, I think again, I've been very critical of ARM in terms of not the company, but the valuation. But right now, it's starting to move in the right direction. Still, the PE ratio is a lot for ARM, but I would say that ARM is riding a tidal wave of movement away from the traditional x86 to ARM. Now, I'm not a x86 doomie. I do believe that x86 is here to stay. I'm not saying that just because anything a CPU is gonna have ARM, it's gonna be the best thing ever since sliced bread. But I do think that slowly but surely ARM is gonna gain market share in the server CPUs, in the server GPUs, in all your phones, your iPads are based on ARM, and I think they're in such a strong position where they can start to increase their royalty income. And I do believe that ARM in the long term is interesting. I still think it's a little bit too expensive at the current PE ratio regarding compared to the growth rate that they have. But if this goes down to like 75, 80, I'm starting to get really interesting on ARM. Going back to the other companies on the list again, Micron. Micron gonna just recently announced that they're gonna hike their prices due to the high demand, especially in the AI data center. We know that their HBM3 and HBM4 in the future is going to be great. They're seemingly on the technical basis catching up a little bit with SK Hynix, and they're an American company, and I do believe that in this current market space, due to the tariffs and all the stuff going on, I do believe that it's realistic that Micron is going to get somewhat of a market share gain. So considering the price target and looking at tip ranks, let's go to Micron here quickly. They're very, very like lowly valued in my opinion. Sure, the memory market is a little bit of a cyclical, but right now we are again in a tidal wave, huge AI tidal wave, and I do believe that this company is way too low valued. I mean the tip ranks average price target is 130, the high at 200, but I'm believing like this company at the current price. I mean, what are it exactly right now? Their Micron is sitting at 74, 75 or so. Yeah, I mean, you could most likely, if this market rebounds, I wouldn't be surprised if I see this company at 120. Again, that's a huge like 70-80% gain. Now, what other company am I interested in here? Look at maybe Qualcomm. I mean, even Nvidia is really interesting. The current price is very, very low, right? But the only thing I would say though for Nvidia is that maybe we're past their highest gross margin phase. In late 23, early 24, they were the most dominant. They were the only game in the park essentially. Sure, AMD was there to be seen a little bit, but I mean Nvidia's, maybe on the pure GPU basis, AMD was quite equal. But in networking, like connecting large number of just GPU clusters, like thousands, tens of thousands, in the future hundreds of thousands, right? They were so much ahead of AMD, and also in the software stack due to the CUDA and the years and essentially decade and a half of backing of CUDA compared to AMD's ROCm. So I do believe that Nvidia's absolute peak dominance in AI is actually past them. I do believe that genuinely, but it doesn't mean that it's a bad buy now. So if the AI boom continues, they will for sure, I wouldn't be surprised that this company can gain at least 30 to 60% from here if the market returns. And then interestingly, I do believe that Intel, right? I've been talking about Intel. Now things are going to get really, really interesting. This for me is the best opportunity out there. Although maybe not the best opportunity in this past week, because a lot of other stocks has been down much, much more. I mean, Intel, what are they? Like over the past month, they're down essentially, they're flat, like 1.5%, less than 1.5% down. So Intel in the like 5-10 years period from now, I do believe this is easily a $1 trillion $1 trillion market cap company, currently sitting at 95 billion. So Intel I really, really like. I do believe that 18A and 14A are gonna be great. TSMC is starting to feel the heat a little bit. Remember that TSMC over the past couple of years has been essentially just hiking prices left, right, center. They're just hiking prices on the chip manufacturing, on the packaging, like the CoWoS packaging, which Nvidia and AMD uses a lot, but also Broadcom and Marvell for their huge AI chips. So they've been like just taking in money left, right, and center. And right now there was I would say over the past 6 months, a lot of discussions about their 2 nanometer process, which is kind of on paper close to 18A. let's wait and see which one is better. I assume that they're good at different things, but they would be in same generation in my opinion, roughly equal. But the interesting thing that I think at the end of the day, it would look like the 2 nanometer was meant for 2026, but it looks like they're starting to feel a little bit of a pressure from Intel, and they're now a little bit more aggressive. So I would say that TSMC is definitely an interesting case. Look at the valuations. Let's go there and see what the current numbers are at. I believe that they're also kind of lowly valued. We can see here. So PE ratio of roughly 23. Yeah, I would say this is a okay place to be. But also remember that they've been hiking their prices. If in a couple of years' time Intel starts to really take market share, and not even take market share, just like show that Intel is back in the game, and maybe take market share 2 or 3 years after that, like I mean close to 2030, I believe that TSMC's margin will take a hit. So in my opinion, in terms of risk reward for the long term, I wouldn't look at TSMC necessarily. I think there's a whole lot of other companies on that list. Again, Micron, AMD, potentially ARM at the right price. But also remember, the biggest one in my opinion, ASML. Sure, the tariffs will hit them, right? But I think this company has huge opportunity to essentially pass a lot of those tariffs to the supply chain after them. Like be it Intel, Samsung, or TSMC. I mean, if ASML's margin goes down due to tariff, they probably sit in a right position to be able to increase their sales price in the long term if this tariff sticks around. So ASML for me is absolutely the most safe bet here in my opinion. I might be wrong, but I think that these few companies out there are really really interesting. Which one are you interested in? And do you believe that Intel still is in terms of 5 to 10 years horizon, by far the best opportunity? I would love to see your comment on that. And yeah, so it's gonna be a really, really difficult couple of weeks from now. I do believe there's gonna loads of uncertainty out there. A lot of these countries will retaliate, so let's see what that is. And maybe at the end of the day, I mean, knowing Donald Trump, he might be bluffing. I don't know. Like it's so difficult to know. I mean, I'm just sharing with you my thoughts as much as I see it, and yeah, I think there's a lot of companies to catch up at these kind of levels. I've been waiting about making this video. My gut feeling was that yeah, it was going to be a little bit more pain in the past couple of weeks, but now I feel we are closer to the bottoming again. I'm not saying, I mean, as far as I know, we could have a complete market meltdown if things continue at this kind of rate. But I hope and I believe that maybe the Trump administration will back off a little bit on this like very, very tough language. So anyways, thanks for your time. Please like and subscribe and share your ideas and comments in the comment section, and see you in the next one.